Okay, guys, I'm back to do another stock market technical analysis video. Gonna just read through the charts and wanted to cover kind of what I'm seeing. The purpose of these videos is to give everyone kind of a read on the market direction. And I'm not talking about where stocks are going tomorrow. I'm talking about trend trading, major trends. We're looking for bear markets, bull markets. We're looking for bear market rallies, bull market rallies, things like that, or bull market corrections. We're looking for the trend, the big moves within a trend, and it's a very high probability or possibility that the market is starting in its next bear market. We had a very strong rally. Let's go to the daily, and I'll point this out as we get into it. Here's a very strong rally. This was a bear market. I mean, we entered a bear market. Technically, down 20% is a bear market. So we were in a bull market. We entered 2019 was basically a bull market if you look at just up 20% from the lows. But if you want to look at kind of the larger picture, then you'll recognize that the bull market starting in 2009 was this. And you see the trend, see how we held support, we held it all the way through. So we broke that trend, that decade-long bull market trend. We broke that in 2018. So then we hit basically almost tagged the bear market. 2019 was a relief rally or a back test trading below the major trend. And then up there at the top is where we failed and rejected and sold off. We then entered a bear market officially, down 20%. And then we had a rally. So it's very possible, and I would say probable, that we are still in a bear market. We did enter a bear market, and this is a bear market rally. This is what they look like. They're very impulsive. They look very convincing, and they convince the masses that the bear market is over and we're starting a new bull market, which maybe that's true, but it's also maybe very possible that we had a bear market rally and we're in a bear market. And so, yes, if you just narrow in on this price action, then you see, you're obviously bullish. But if you zoom out and you see the larger price action, this might just be the very beginning of what's to be the downtrend, all right? The beginning of the downtrend. Here's the uptrend, the big uptrend that we had for 10 years. This is potentially the inflection point where volatility increases. We've broken the trend, and now we're getting this topping kind of up and down volatility pricing action. And maybe we're beginning the next trend, big trend, which is down. So that's all I'm trying to point out. Let's narrow it into the smaller time frame to get the daily read on it. All right, so here's your island cluster top. This is the reversal pattern that I pointed out that said, okay, this was the sell signal I was looking for. And then we've just been chopping sideways for quite a while, a few days now, going on as of today, about 2 weeks. We had the kickback rally right here, but it didn't negate this island cluster top reversal pattern. So what that means is, you created the island cluster top, see the gap, and then you gap down. That creates the island. And then we had a relief rally where a lot of the time they'll try to shake out anybody that took that reversal pattern, like myself. I got short right here at the reversal, at the gap down. It'll try to shake them out by running back up into the gap, even filling the gap, sometimes even moving just slightly into the island right here. It should not overtake the island. It should not move higher than the island, and we haven't seen that. But here we fell right. We entered the gap, never closed the gap, and then just chopped sideways, kind of up and down. I mean, we saw several days where the market was gapping up, and then it would sell off. We did it again right here, gapped up, sold off. Today, we gapped down and sold off impulsively. So this is impulsive price action moving down, and this is what you want to see when evaluating this reversal pattern. You want to see a breakdown right here, which is what we saw. You can see a kickback rally, but that should fail. It should not continue. You should not be able to run back up into the island and move above the island. It should fail at some point, and that's what we're getting today. We're getting that failure in the SPY. So now we head lower, most likely, at least going to head down to the bottom here at this 296 level. And there's a gap right here also. You'll see the gap that's right there. Probably going to come down and fill this gap at 286. That's the short-term picture on the S&P 500. If this happens, it doesn't, well, yeah, if we fill the gap down here, it does actually change the picture of this bear market rally, because we will now have lower highs and lower lows. So here's your high on the daily chart right here. Here's your previous high up here at 323.75, and then you have a high here at 315. And if we make a new lower low by filling the gap, then here's your previous low at 296, and then you would have a low at 286. So you would have a new trend change, which means that this rally is the trend, the uptrend is over, and we've started a new downtrend. So for all the bulls that say the trend is your friend, you'll need to watch that to understand what the trend is, because it's a potential that we topped out up here at this island cluster top, and we are now going to head lower. One final thing we want to look at, we always want to keep an eye on, is volume. I know it's easy to sometimes throw that out, but we do want to look at that. So here's the volume for today. Nothing impulsive yet. We have a few more hours to go in the trading day. We'll see where the volume ends up. It's not impulsive selling volume. And the other thing that also I think is important, we did get, flipping back to the hourly, we did get a gap down. So that creates a little bit of a trap, because you can see it trapped all the action that was right here with the gap, and then it was a gap and crap, basically gap down and then sold off impulsively. So all the bulls that have been buying the dip down in here have now been trapped, and they're underwater. So we'll see if this continues, because we also got the trap right here from this island top cluster. So we've trapped in some traders. What I'd be looking for to really create a further trap would be another big gap down. That would be something that would really trap in quite a few people. Anybody that took the took this trend right in here, they could easily get trapped, but I don't know if we'll see that. So we have to just keep watching and see what that's going to do. But the volume is not impulsive. I mean, it's not crazy volume, so that's not anything that is a tell yet. Doesn't mean that it matters, but something that was interesting is over here on the Qs, and this is what I want to point out here on the daily. So the Qs, I've got a couple things here on the Qs that are significant that I think everyone needs to pay attention to. One, we recently in the daily had this doji candle, shooting star doji, I think is what these are called. And today looks like we're going to get follow through. So that's confirmation. So that's a reversal candle right there, the shooting star doji. That tells you that there's a possibility of a reversal, but you need to wait for a confirming candle the following day. Or it can come a few days after, but you should never have a candle that really wipes out this doji. It shouldn't really recover it. So you can chop sideways and then sell off, but the next day is good. And sure enough, here it is right here. We also saw it right here. We had the big sell-off. Obviously, that didn't play out. But there it is, potential reversal and confirmation. Now, what do we have to look at is we've got this up channel here on the daily. We need to break this up channel. This channel, unless it's broken, if I'm rolling back here, you can see there's still support down here. You've got several reactions, 3 reactions right there. So even though we're coming down, we haven't broken the channel. We need to see a break of that to give a little bit more clarity on this bearish move here. The SPY is not going to break down unless the Qs does. So the Qs is still in an up channel. Need to see the breakdown. When that happens, that should do some real damage to the S&P 500 as well. The other thing to pay attention to, this is interesting. I noticed this the other day on the weekly. I want to go, and again, looking at the bigger picture stuff on the Qs, it's important because this is going to tell you where the S&P 500 is going to head. Qs is really the one sector in the S&P 500 that just continues to show strength. And while the other sectors are weak, you've got tech, and it's not even really tech. It's really 5 stocks. It's FANG. It's the go-to stocks that everybody loves to buy. They love to own it. They think they can never go down. And everybody's crowded into these 5 stocks, essentially. A lot of people own them, and it's a very crowded trade. So anytime something gets really crowded, it's when my ears start to perk up, and I start to look for cracks in that trend. So that's something we're looking for. But here's the long-term trend in the Qs. You can see it right here. This is a weekly chart going all the way back to 2009. you can see that we started to make the top of a channel right here, and we had lots of reactions here on the weekly. Here's some more, and then here's the last reaction, and then this week we basically popped right up to it, overshot it just briefly. You can see the wick on the weekly, and we've now sold off. If the week closes right here, then this would be a reversal pattern on the weekly. So something to pay attention to. I mean, it's still in an uptrend, so the bigger picture still in an uptrend, but this is not the area you'd want to be buying the Qs at. This is actually an area you'd want to be shorting. You'd want to short at resistance and let this thing come down. I think the best or safest way to do this, because the Qs has been strong, is look for a break on the hourly chart below this channel right here. We get a break here. That should set it in motion to move down to the bottom here around 214 or so. And then we'll have to watch and wait and see what we got. Does the Qs finally break and stick below this bull market uptrend? The Qs has broken it twice. Here's the break. Here's the first break, and here's the second break. Both of those times, the Fed came in and just did everything they could to support the FANG stocks and support tech. So this was saved by the Fed, and this was saved by the Fed. This is not being recovered because the Qs and the fundamentals are getting better for these stocks. This is Fed manipulation is what these two recoveries are, and that's kind of why they look the same, because you get the crack, you get the crack in the Qs, the Fed comes in and just dumps a bunch of money, pops it back up. You get a crack in the Qs, the Fed dumps money, pops it back up. So what you'd look for is a break of this again, and see what happens when you start breaking this and the Fed does what they're going to do and it doesn't recover. That is going to be a very clear sign that there's going to be a lot of pain ahead, but we don't have that right now. So again, Qs is still in an uptrend, but it's not somewhere you'd want to be buying. It's somewhere you'd want to be shorting, probably at least down to the bottom of the channel. But first things first, we got to break this little up channel right here on the hourly. So a break of this sets it in motion to go to the bottom of the larger channel, and then we evaluate it when it gets down there. Here's XLF. I don't look at this one too often, but maybe this is what we got going on. On the lower end, we've got a couple reactions. There's only two, so it's not a trend I can mark out yet. That's why I don't trade this one right now. It's not the cleanest chart, but we do have this big gap down. We're starting to sell off. Do we hold support right around this 2270? Or do we fail? That's kind of what is yet to be determined. So, but again, down 3% today, so that's weak. Let's look at XLV. XLV continues the sideways chop. This has just been a grind session. Just chop city for anyone who's been trying to trade this. If you're swing trading this, it's gone nowhere and it's just chopped it up. And if it's ultimately, ultimately for me, at this point, I was in this thing, made some I caught this big downdraft right here, so that was good. But ultimately now with this clear channel, I need to see a break of this 96.78. It's probably going to come in the form of a gap down if we do get a break. Otherwise, we'll probably get a move higher. And so if we get a gap down and it's able to hold and hold below, then that might be the trap that you're looking for, to trap all of this price action that it's been trading in. So we'll watch for that. Until then, for me, it's just kind of a no touch zone. Okay, let's look at Walmart. This continues to work. Just a little lesson I want to kind of explain on this one. We got short right here on this gap down. And the reason why, if you go back, if you've been following me, you know why I got short there. And here was your shakeout move. Whenever there's a clear signal on a trade, there's almost always some sort of a shakeout move that's counter, that kind of keeps you guessing against that clear signal. And that's what this was right here. The gap down back below the bearish rising wedge right here, you can see. And then we had the gap down, and that was your signal. But basically, and my trend line seemed to have gotten moved. we gapped down here, and that was your signal. But here's your shakeout move, which kind of makes you guess because it brought you underwater. But then that failed instantly. The day opened way up here, and it sold off instantly. It came right back down to support, and then we broke down eventually. Here's your kickback rally. So you can see we have this little shelf of support right here at 121 on Walmart, and it contended with that for several weeks. Finally started to break, recovered it, then it broke right here rather convincingly, and then we had this kickback rally and popped above it. So here it is right here. Yesterday they popped it up and sold it off right back down, and today trading back below it. So we're watching that level. It seems to be contending with that, but that does seem to be holding resistance, and I suspect it will hold, and we'll move to the bottom of the bearish rising wedge. So here's your big picture stuff on the daily going back to 2015. There's your bearish rising wedge. I think we're going to move to the bottom of the wedge, and ultimately I think we'll break that wedge and make a strong move down. But for now, we're just looking for a trade down to the bottom of the wedge, which is, roughly 10% down from where we're at. So looking for that to continue. And this is why the Qs has not broke down, because Apple and Microsoft for the most part. Apple, here's your bear market rally potentially. You can't really say it's a bear market rally in Apple, because Apple has recovered the bull market trend line. If I mark it out here, this black line, that's your bull market trend line in Apple. So that's the strength in the market, is the large cap tech. Here's a daily chart. It's going back to 2009 of Apple. You can see held that, but now recently it's just become really, it's become choppy, and it's a messy trend line that's been violated several times. So we broke it back in 2018, had a back test in 2019, but then they recovered it in 2019. 2020 it broke again, snapped back and recovered. So at this point it's been chopped through and violated. It's not holding up as well anymore, so it's hard to use that as a valid line. So again, for Apple, we've got to narrow it down to smaller time frames. And here's your uptrend line in Apple on the hourly chart. We haven't broke it. We're still holding. So today's just a pullback in an uptrend for Apple. Same with Microsoft. Narrowing it down to the hourly. We violated this trend line. So at this point, it's becoming a mess. But if I move it around, I'm only getting a couple data points. So I'm going to leave it here for now. Microsoft is basically still holding support. We're above support, moving down slightly in an uptrend. So those things give you pause when you're thinking about, shorting, because the market's so heavily weighted when it comes to the FANG stocks that without the breakdown in these things, the market just can't break down. So we have to keep watching these to give us that further clues on where the market's going to go. Okay, guys, TVIX, I just want to put out a disclaimer on this one. I just read somewhere that they are discontinuing to trade TVIX, and they're going to be pulling it over to the over-the-counter market, which is not something you want to be trading in when it comes to a volatility instrument. So I will not be covering TVIX anymore, and I'm going to go ahead and erase this. I just want everyone to know, I will not be trading TVIX. I won't touch it, okay? And I'm not going to be covering it anymore. I suggest anyone, well, I can't suggest because I can't make, financial advice or anything, but in my opinion, I would not want to own any of this at this point, and it's time to move on. Let's look at this DraftKings. Okay, so DraftKings, it's, it just takes time for these trades to work out, but DraftKings, you had an uptrend right here, started back here in April, and it was pretty violent and impulsive. This trend from the lows here brought this thing up 282%. So crazy move higher. I did not jump on this trend. Wasn't even looking at this thing. But now that you can clearly spot the uptrend, now I'm looking for a short, and have been looking for a short. So we had the breakdown of the trend right here with a gap down. So we gapped down, had a kickback rally right there, and then we just kind of traded sideways for a little while, and we're starting to break down now. So we'll probably fail this level because we've already been here once before. You can see that we already, this is your support. We've already come down here. We, moved higher, and now we're starting to head lower. So I think we're going to probably break down and break this 35, 34 level. And then my target is 28, 26. So that's the trade right now for this DraftKings. Here's Redfin. This one's been a little bit stronger on the back test. You can see here's your trend line, nice clean uptrend line. Looking, when you see these uptrends and you're going to short, you wait for the breakdown. So we got the breakdown right here. It wasn't that impulsive, but it was a breakdown. So then all the action now has all been trading below trend. This is exactly like what the SPY looked like in 2019. It was just doing these kickback rallies, trading below trend, and then ultimately it did a full back test of the trend line, and then you had the big impulsive sell-off. So maybe Redfin still has higher to go. It could easily run up and do a full back test and tag this trend line, and then you'll get the impulsive breakdown. So it's definitely not an all-in short, but we are having these kickbacks, and it is starting to fail right here. You want to see I think you want to see a failure of this 37 level. If it can break below this 37, and then that should probably set it in motion for the move down. Target would be, there's several levels, but we could probably mark out this one here. And we also have and that sits at 31 roughly. We've also got a level right there. I'll have to tighten this up, but this looks like the kind of the rough levels that we've got for now. So, and that sits at 25. So we'll just kind of look at that. We'll leave those up for now. See what we get here in the future. Okay, that's all I got for this video. Try to keep it somewhat short. I'll put out a separate video today or tomorrow on gold. Long term, I'm still bullish gold. So in general, I'm looking for longs on gold miners and continuing to look to buy at support. But it's important to realize where those support levels are at. So I'll put out that video. Leave me a thumbs up, guys. Let me know what you guys think. And, where do you think the market's heading? Are we still going higher? Are we starting a new bull market? Or is this a bear market rally? Let me know. Talk to you guys later. Bye.